So I think a lot has happened since our last podcast, and I think we have too much to discuss. Amazing companies have reported earnings, and there's a lot going on in the world as well. So why don't we get started, Ridhya? Handing over to you.
Yeah, let's start with the Iran war. So, yeah, we're making this video, we're recording this video while the war is ongoing. And it's obviously sad. Wars, people die, be it soldiers or civilians. And a lot of reports are coming in from Iran where people are going out to protest. Like huge crowds of people have gathered at different parts of Iran to, oppose the current government. And then Iran's supreme leader has been killed apparently, and even then the attacks by Iran on Israel and on multiple US bases in the Gulf, be it Kuwait or Dubai or Bahrain, they are continuing. So the attacks did not stop even when Khamenei was declared to have passed away. So I don't know how far this war will go, how extended would it go. Um, but like it is something which is basically out of all our hands. So not to sound insensitive, but that is the reality, and I think we should be a little practical uh, as investors. As you know, how can we make good use of this opportunity? So yeah, let's talk about a few things, using which we can probably make some profit. So first is that Iran has blocked the Strait of Hormuz, which controls around 20% of the global oil supply and around 25% of liquefied natural gas. So India will definitely be hit because of the natural gas part, because majority of our uh, natural gas comes from the Strait of Hormuz. So uh, not just for India, but yeah, global prices for oil and natural gas are expected to go up at least for the first 2 days, even if the war is short-lived. And let's say the war, gets over in a couple of more days, I expect the prices to go up at least for 2 days. But yeah, if the war prolongs, then all the supply chains would get hit pretty badly, and these resources, the prices of these resources will go up massively over time. Some experts are saying that oil per barrel would reach around $100. So let's see how that plays out. And along with that, am also expecting gold and silver to start gaining strength. They've already been in a good upward momentum in the past couple of weeks after that dramatic fall. So I think that can continue playing out as well. So and yeah, obviously defense stocks like Lockheed Martin and some other, like let's say GE
War-related
Aerospace,
stocks.
these stocks might also, yeah, do well.
Yeah.
But that, yeah, we haven't really delved deep into it yet. But yeah, that's a sector you guys should keep a close eye on as well.
My fear with the war is that generally, and I was talking to a friend as well, that there are definitely companies that can, that will profit, from the war, because they are in this business and stuff like that. Generally, for me, the fear
Yeah,
is that you have to time this perfectly. Like if you want to, take a bet on oil, or if you want to take a bet on, these war companies, these are generally short term trades, and generally are traded on a lot of insider information, right? So if you are at a disadvantage,
that is
and
true.
if you're
Yeah,
too late to the trade, then it might not make as much
yeah,
sense. So you have to figure out what's your edge here, right? What's the alpha that you're looking at, and once you kind of make that, then get out, and don't try and keep in those stocks, or stay in those stocks for a longer amount of time. But for me, when I'm thinking about, like, I'm personally avoiding this entire oil trade, and yeah, because I don't think I'll be able to time it. But let's say the stock that I'm invested in, the AI stocks, and all of the other mag 7 names, etc., the biggest challenge there is that if this war continues for a longer period of time, then it might result in inflation again in the US
yeah,
and
for
in other
sure. Yeah,
countries also. And if
yeah,
that happens, then the whole bullish scenario of interest rate cuts might not happen if inflation resurges. So that is going to be very, very, very bearish for the market. I mean, I think
Yeah,
I think everybody's like, we have already fallen so much. I think if we see inflation research, then trust me, we haven't seen anything till now. Right? It's going
that's
to be
true.
crazier than 2020. So
That's for
just
sure.
something to
Yeah.
be to look out for.
Yeah, adding to that, if you've noticed the prices of large defense stocks like Lockheed Martin or Northrop, they've already surged quite a bit in 2026, like 25 to 35%.
Hmm.
So again, that timing part, right? So we don't know, like if the war keeps on escalating, so yeah, it might keep going up. Let's see, like when does it stop? Hopefully, it stops soon. But yeah, like if it drags on, then yeah, these might be good swing trades. Even for oil, again, yeah, like if the war drags on, then yeah, oil can keep going up. But yeah, always consider these trades as swing trades and not something you can hold on for a long.
Okay, so the next on the docket is the most important company. Some people want to call it the daddy of AI bubble.
Yeah,
So Nvidia has reported earnings last week, and the earnings were phenomenal. We'll just quickly go over the numbers. Let me just share my screen, and we'll also try and explain what's our hypothesis of the stock has fallen after the earnings. So let me just quickly share my screen. Okay, so here, as you see, the earnings itself were great. The EPS expected was 1.54, and what they came out was 162. The revenue expected was 66.23 billion. They reported 68.13 billion. But primarily, apart from the beat, the bigger number here is this part, the expectation, right? That I'm just highlighting. So basically, the street was expecting a revenue for the next quarter to be around 72 billion, which they raised their bar on, and they said that they're expecting around 78 billion. And again, mind you, this quarter's revenue and the next quarter's revenue, they are still not counting anything from China. They are still assuming that to be zero. So the whole idea that they have not only beaten earnings, but they have gone beyond that. And they have said that our next quarter earnings is more than what the street expected. That in itself, everybody was assuming that is going to be super bullish. But what has happened is that the stock has fallen. I think it is currently at around 177 right now. I think towards the highs, it was around, let me just see the 5-day chart here. Yeah, it did trade about till about $197. So it's a considerable fall that Nvidia has seen. Okay, so the fact here is that even after reporting such great earnings, the question is that why Nvidia is falling. One big hypothesis that I could see from like after earnings, what usually happens is that analysts ask questions to the CEO, right? One of the bigger question was that obviously the biggest buyers of Nvidia chips are all of the hyperscalers, right? And hyperscalers this year alone in 2026, they have given a guidance that collectively they are going to spend about 600-700 billion dollars. The point is, how long can this continue? Because if you see, they have already they are already spending all of their cash flows today. They are also tapping into the debt markets. Like for example, Google has issued out a 100-year bond, etc. So now companies have started tapping into elsewhere to raise funds. Now the question is that obviously Jensen, the CEO of Nvidia, is saying that this is a multi-year build-out cycle, but the fear is that maybe he's talking the book. And on the other end, the moment these hyperscalers stop investing, the Nvidia stock will just fall off the cliff. So that's the biggest fear, that how long can they continue to spend, because they are almost using all of the free cash flow that they are generating. Although there are no signals like that, because these CEOs of hyperscalers are also repeating what Jensen is saying, and I also personally believe that that it's a multi-year build out that will happen. But that's the fear that the market has, that the market just doesn't want to look at the next quarter. The market wants to look beyond that. Like, what about 2028? If if the company is not gonna
yeah,
sell as many chips and not gonna make as much revenue in 2028, then why should we give Nvidia the multiple that everybody's talking about? That's the whole thesis. So what are your thoughts, Radhya? What do you think?
So yeah, I think along with that, I think people were also sort of taking in account that okay, a war is probably imminent. So be it Nvidia or something like Netflix, like the rally might not sustain. Like even if the immediate rally after earnings, or let's say for Netflix, when that deal thing happened. So that could also be a reason why people did not buy into that good results leading to a bullish outcome for at least the near future. So yeah, I feel suddenly I saw that on Friday the poly market bet on the war happening suddenly increased. So I think like the insider information from even
Oh
like
yeah,
the top
definitely.
US institutions is coming out more easily.
Definitely, yes. Definitely, I guess. So yeah, I mean, something to watch out for, yeah, with Nvidia, like with respect to fundamentals, if you see that, the fundamentals have only gotten better, but the sentiment is not. So now you have to decide as an investor that what kind of an investor are you, right? Do you believe in the fundamental story, or do you believe the fact that AI is a bubble, and Nvidia is not going to be making so much revenue in the future, and hence it does not deserve the multiple that everybody is talking about, and that's the bet that people have to take, and that's a decision um, that investors have to make. Okay, let's discuss the next thing on the docket.
So then, yeah, continuing on that, I mentioned Netflix, right? So the Netflix deal did not happen with Warner Brothers, and they pulled out. And then Paramount took over and got the deal done with Warner Brothers. So I think that also would have major implications for all these three stocks. So yeah, like Warner Brothers sort of fell down, but Netflix and Paramount did well with their stock price in the last couple of days.
Yeah, I think
So
I'll
yeah,
have to
what
give
are
it
your
to
thoughts on it?
Paramount. I'll have to give it to Paramount that these guys just did not give up. So at the start, if you all
Yeah.
remember, everybody was valuing Warner Brothers at around $80 billion. Now they have to pay around $113 billion, if I'm not wrong. Netflix has finally decided to give up, as you said, Maya. Uh, just after the decision, the Netflix stock rallied, I think, about 13-14% in the day. And broadly, how, as an investor, we have to see is that Netflix has now become a very, a stock that's available at a very reasonable valuation, right? So let me just quickly show
Hmm,
some charts
that's true.
and prove the hypothesis of why it's actually bullish for the company if they are not getting Warner Brothers, right? It might be slightly non-intuitive, but yeah, let me just show certain metrics.
Actually, a lot of things they won't have to worry about, the copyrights and the rights management and transfer of ownership of a lot of assets. Then they won't be able to. Then they won't have to take on the debt, to be able to buy such a big company. And
That is true. That is
so,
true.
like stuff like that is.
So yes, we have Netflix here. So most importantly, if you see, I'm looking at the annual metrics. So the revenue for the company is literally rising, right, year on year, and this has never been a problem for Netflix. I want to quickly show an important chart of free cash flow, where if you go back and look at the chart in 2021 and 2022, the stock was falling a lot, right? One of the primary reasons being
Yeah.
that the free cash flow was not great even after generating so much revenue, which they have literally turned around, right? As you can see, the free
Yeah.
cash flow has been growing like crazy. Now that's a turnaround story, right, from 2022 onwards, and you will see that in the stock as well. Let me just quickly show the price. So if you see for the last 5 years, so this is where the stock was at around 18-20 dollars, right? Relatively, I think they've done a stock split. So this is after that. So this was the level at around 2022. At the highs, this was a $130 stock, right? Which is now again at the bottom, it was
Hmm.
$78. In a day, it has now moved up to $84. Sorry, $96, my bad.
Even now, yeah, even now it is 28% down.
28% still down, yes. The bigger thing here that I wanted to show is that if you see the price to earnings metric, right? Price to earnings basically tells you that how uh, uh, basically how expensive or non-expensive the stock is, right? If you see for the last 10 years, right, the stock has only come down. The primary reason being that they have grown their earnings exponentially, like we saw in the free cash flow chart. So the stock is available at a dirt cheap price to earnings relatively. Again, I'm not saying 31 is a low PE, but relatively, if you see for Netflix, because it is already always traded really high, right? It is available at a very, very low price to earnings right now. And the bigger thing that we wanted to talk about also was that here in, yes. So as you can see in the chart, Netflix is also at a 200 weekly moving average. So in this podcast, we also want to give you a mental model of when great companies start falling, when should you actually buy them, right? Because people just say that it's a falling knife and it's not a great idea to buy a falling knife. But the question is, when do you actually start buying? That's the biggest decision. So historically, what I have seen, and I base a lot of my decisions based on this, is that 200 weekly moving average, exponential moving average in this sense, as you can see here, is a good level to decide. As you can see, Netflix has rebound from here. Here also you can see this was around 2023 when the stock was falling. It is literally rebound from here. Obviously it can fall below that as well, as it has happened in the past. That is why a confirmation is very important, right? Like, just because the stock has touched this is not a buying level, but a
But
confirmation like this, like if Netflix can sustain this, I think I would want to have all Netflix. I already own Netflix, but I would want to add more to this if I get confirmation. So that's broadly how I kind of see the setup for Netflix.
yeah. And this is, I think, one of those instances where the news was waiting for the chart, like to bring the chart in,
Yeah, absolutely.
making the chart true.
Making the
So,
chart true, yes. Like, what are the chances that at 200 weekly moving average, Netflix says, I don't want to buy Warner Brothers? But yeah, that's how it is. Some people say that, you show me the chart and I'll tell you the news. So, yeah, that's about Netflix.
so since we are talking about undervalued stocks, I think a company like Microsoft also deserves to be in this list. And let's take a
Absolutely.
deep dive into that as well.
Absolutely. Yes. Let me just quickly share my screen and talk about Microsoft. So, yes, we have the data for Microsoft here. Let me just show the price right now. So the price has fallen from the highs of $517 to right now it being around 300. I think it's below $400 right now, $380 or something. Yeah, $392.
392.
Right. So let's just first see that, is there something that has fundamentally changed for the company? Like, why is the stock falling? So the first thing is that their revenue is, as you can see, really accelerating. So there's no problem with their revenue. Uh, Segment wise, also the right segment is growing because they are one of the biggest cloud providers, right? Among the top three. So that metric is also great for Microsoft. What people are really worried about, I think one of the major reasons, what we talked about in the last podcast as well, is the RPO, right? The cloud backlog. So basically, this is the money that has been committed to them but has not been paid, right? This has basically gone from $368 billion, also, which is a huge amount, to $625 billion. And majority of this is from OpenAI. So the
Around
fear is that,
45.
yeah, the fear is that what if OpenAI cannot pay all of this money? Then
Almost
that's a
half of
loss.
it. It'll be
Almost half.
crazy.
Yeah,
Imagine it goes bankrupt and then 45%
right.
backlog just gets dissolved to zero.
Yeah, that's the biggest concern. Uh, but otherwise, if you see, so basically, again, here also, the decision that investors have to take, that do you believe that OpenAI will be able to pay back this money, and
Yeah.
or Microsoft will be able to hedge its bet, right?
Yeah.
That is where Google kind of shines, because Google does not have a one or two customer risk, right? It's not like two of its customers, if they go away, their revenue will just cut will be cut in half. That's not the case with Google. That's why it's not fallen as much in this bear market. But if you see the price to earnings ratio, also Microsoft is trading at almost lowest PE that it has traded in the last 10 years. So it is at 24.5 PE right now. You see, in the 2022 bear market, this was at 24.66 or around there. In the 2020 COVID crash, stock was, let me get it right, I think around 23.93. So as you can
Yeah.
see, I can literally draw a line here
Yeah.
that lacked as a support. So historically, some people can argue that this is a very good price that Microsoft is available at. Also want to show a quick chart that we showed for Netflix. For Microsoft, as you can see, this is also almost touched the 200 weekly moving average. But the
Yeah.
point to note here is that in the last 10 years, let me just pull back, zoom out the chart a bit. Yes, as you can see, there's a small circle here as well. This was in 2015 or something. In the last 10 years, there are only 4 times that Microsoft has touched the 200 weekly moving average. If you would have invested here, if you would have invested here, if you would have invested here, you would have made a lot of money from just Microsoft. Now, the question is that, should we just blindly buy at this level? I think I'll just say the same thing that I said for Netflix, that we'll have to wait for confirmation, right? We'll have to wait for the bounce, wait for 1-2 weeks for it to sustain. Obviously, the risk there is that, you will lose that 10% gain, but I would rather lose that 10% gain and not take the risk of, just breaking this and, falling even more.
Watching
So
falling knife.
yeah, and then you'll be literally be stabbed by this knife. but yeah, something
So
to look out for. But as a mental model, I think it's a good mental model to be aware of what are some good buying levels for these great stocks.
there's one more thing I read about Microsoft. I read that Copilot has it's having a very low conversion rate into paying customers. So I think that is also one factor that some analysts are trying to like making it bearish, sound bearish the stock, and also uh, that backlog tied to OpenAI, right? So I feel now that OpenAI has kind of is partnering with the US government. So I see it as like a much more safe company. So again, risk associated with that also, I feel the risk
Should
isn't
be
as
taken
much,
off.
and Microsoft seems very undervalued because of these reasons now.
I agree. Yeah, I mean, I've already started nibbling in Microsoft, but these are small nibbles. I am still waiting for the confirmation for a rebound from the 200 weekly moving average. And if that happens, I think we should. If I also see parallelly a sentiment change around the market, I think Microsoft is definitely something I'll add to. Broadly, one other factor is that amongst all three cloud providers, right? AWS, Microsoft Azure, and Google Cloud, Microsoft has the best margins on cloud. Their margins on cloud is about 40 to 45%. For Google, it is rising. Definitely, Google right now is about 33%, and it's a very great jump that they have taken from the last quarter. But still, if you see the highest margin business in cloud, that is Microsoft. So their fundamental business is great. I don't think that's going away. I don't think companies are going to start using Microsoft Office. Sorry, stop using Microsoft Office. So they have great moat. They have great control on recurring income. So these are some of the great companies. I'm just waiting for confirmation. So yeah, that's about that. But largely, I think also we wanted to mention it to people that there will definitely be these kind of big drawdowns in the market. If you have invested in the company, what you need to ask yourself is that, are you really bullish about this name? Or did you just buy this name because somebody mentioned it on Twitter? If you did, if you had no reason to buy the stock, you will have no reason to hold it. That's how I
True.
see it, right? Then you
Yeah.
will sell it at the first instance. But if you really understand the stock, if you really understand their business, and if you're still bullish and nothing fundamental has changed, I think you will buy into the right names, and when the market turns around, you'll see the gains for it. So something to be vigilant about.
So yeah, these stocks are at near 200 weekly moving averages. What I'm worried about though is like S&P and Nasdaq, they are starting to show weakness. They've been going sideways and
That
slightly
is true.
trending down since the last few weeks or even a couple of months. And now that the war has happened, so Monday when the markets open, how will they react? That is what I want
That
to
is
see,
true.
and it'll be very interesting to see if such big companies would go beyond like below their 200 weekly moving average if the whole stock market does badly. Uh, like yeah, as a buying opportunity, it would be a great buying opportunity if we can reach that for the indices as well, like S&P and Nasdaq. But let's see how the war pans out. So it'll have huge implications in the next 1 month, I feel.
Yeah. No, that's a very good point actually. Like if you see year to date, S&P hasn't actually fallen that much. And if
Yeah,
S&P is to fall by let's say
yeah.
5% or 10%, then the market is not going to care that Microsoft, oh wait, let's not dump Microsoft because it's at 200 weekly moving average. That's not going to
Mm.
happen. Netflix, Microsoft, everything is going to dump. But I'm just seeing it from a perspective of it will be an even better opportunity to buy these names. Okay, so one another major update for everyone is that Parikh has launched their new fund, which will allow Indians to invest in US stocks, right? Why this is better and why this is different is because till now, if you had to do it, you could do it in two ways, right? You could invest in mutual funds that invested back in Nasdaq or S&P 500, but that already has hit a cap given by RBI of $7 billion. So these funds have stopped taking money. The second way you can do that is through Ind Money and Vested, Interactive Brokers, etc. But with this new fund, Parag, this is through the Gift City channel. So this kind of bypasses the $7 billion upper mark that RBI had. So let me just quickly share the screen and share some of the details. So yes, so this is the PPFS mutual fund. They have launched two funds. There is a Parikh IFSC S&P fund and there's a Nasdaq fund, right? Uh, uh, Similarly, what you can see here, as I already mentioned, that this is above and beyond the $7 billion mark, so you don't have to be worried about that. You don't have to be worried about converting your INR to USD and losing some there as well and then invest. This can be a direct INR investment, but there are two demerits right now. The minimum buy-in is about $5,000, which I think that will be lower down in the future. And the second thing is that they are only accepting, like, this is completely offline process right now. So if you apply, they'll send you a form, and got to fill the form, and maybe they'll do some KYC checks, and then only you can invest. But more or less, this is a direction uh, that is good for us all Indian investors who's investing in US market. So this is something that I thought was great news. So I'll definitely, I'm kind of pursuing this, and we'll try and figure out how I can invest. Just the offline process is going to be very painful, but we'll see. So yeah.
I think that was a great episode, especially for a lot of investors are worried what to do in times of such wars. So I think this should be very insightful. Please let us know how did you find the episode.
Yes, absolutely. And hopefully you like and subscribe. Yeah, I think we usually don't say it, but it will be great, help if you like and subscribe the channel.